Welcome back to Primary Source China Investment. Peng.guo and I are back again with show F3. And before we get into that, there was a ton of news and most of it bad coming out of China this week. And we're going to talk about how that's maybe affecting the markets and the economy. So it's not just COVID. BlackRock came out and turned negative, which is probably a sign of bottoming. The whisper numbers for unemployment, and that's going to drop on Monday, were that it's going to print the worst number ever, which somewhere around 6% unemployment for China. There was the third largest property developer defaulted on US dollar bonds, although they paid their renminbi denominated bonds. So all of this, and even Hong Kong, there's a lot of quirky stuff going on in Hong Kong, but that may be signs that all of the bad news is coming and coming and coming. That's the sort of focus for a bottoming effect. And, you know, we have to remember, every finance professor has told us, don't mix up the economy with the stock market. So, you know, lower GDP growth doesn't necessarily mean bad performance for the stock market, and also the reverse of that. I mean, if we look at the US names that have grown the most in the last 10 to 15 years, the Microsofts, the Amazons, the Apples, they were growing at 15, 20, 30% when GDP was only growing at 2%. So it's not necessarily a high correlation. So that's where we're sitting with China right now. And what we're looking for are signs of bottoming. And are there some green shoots?
I totally agree with you. So like the economy is not equal to the GDP. So their performance, you cannot mix. Otherwise, it's easily make a huge mistake in the investment. That's right. Recently, that's not a bad news. Actually, people don't need to hear this number from their environment. They already get enough bad news, like the COVID, the employment, and a lot of the slowdown on the economy. So people already feel about that. The worst thing is, so people just don't know when would be the bottom. So they all understand and how long for those kind of the situations. In China, they also have very important social finance number that published in April. Social finance numbers, including the four parts, like the on-balance sheet loan, off-balance sheet finance, direct finance, and other finance. So it's dropped 80% compared to the last month. It's very, very bad month.
Yeah, and also total loan growth had a very low growth rate, about 10%
exactly,
or something like this. Yeah.
Yeah, people just don't want to borrow and expand the production because they cannot sell the product. That's the simple reason.
Or they can't make it. Their factory is shut down.
Yeah, but this number is a leading indicator. So it's always probably lead 2 months to 6 months compared to the bottom of the GDP. So I think from the China stock market, especially recently, the market already reached the bottom. It's very interesting. In China, the bottom, they have many definitions. They could be like the technical analysis bottom, right, policy bottom, emotional bottom, what kind of things. But I realized recently definitely it looks like the first bottom of the equity market. And most of the time they have the two bottom, and then they can grow growth.
Yeah, you'll never have perfect information, but you know, certainly the COVID lockdowns that are, you know, cycling through different provinces, you sort of have to make a decision about where we are in that process and what that means in terms of production and export, because China is largely an export nation. Once those products get ready for export, how long is it going to take the, you know, sort of pig to go through the python? And right now we don't know that, and you're probably not going to have complete information on that. But like you said, it's probably being priced in at this point in terms of valuation.
That's true, yeah. And also, like I said in the last couple of times, U.S. equity market is the major risk. Right now, we already see that. What's the risk is already in the market. So hopefully, in the U.S. equity market and get stable. And that's probably stable entire global risky asset. Otherwise, all the risky asset will get down.
Yeah, I wanted to talk today a little bit about what happens in a bottoming in China specifically, because there's different things. Some of the great names in tech in the U.S., people are saying, well, if Apple finally breaks, that's going to be the bottom. And we're not in the business of trying to pick the bottom, but we want to look for signs of bottoming. And one of the quirky things about China market is the shareholder structure of these large SOEs. And a lot of those large SOEs are what's driving the CSI 300, the major market index. So, for example, industrial securities, which is stock symbol 601166, they're the 7th largest holding in the CSI 300. And I just picked those because it's a large financial services company. Everybody in China knows it. And its largest shareholder is the Finance Bureau of Fujian Province. And what's important about that? What's important is that the Finance Bureau is obviously a long-term holder, but they have other priorities other than just profit-driven. So in the US, Tim Cook is pretty clear about being profit-driven. The Finance Bureau of Fujian Province has other motivations, maybe like unemployment, like ESG, like focusing on the 5-year plan, or focusing on the next 18 months, what's good for the province, not necessarily what's good for the shareholder.
If you would see the shareholder structure, those really belongs to the strategic shareholder. Those holders never sell their shares.
If you look at like Maotai, right? Let's just take Maotai. It's the largest weighting in the CSI 300. Well, 60% of Maotai is owned by the Guizhou government. So that province, they're not selling their shares. There's no doubt about it. They are long-term strategic holders. But their motivation may be very different. And in a sign of bottoming, it feels like those kind of companies are the safe havens, because you don't have the hard selling that you'll have in some of the private companies that are traded in China.
I agree, especially in the market crisis. So people fly to the safe haven. And those are large state-holder companies. So obviously, they can offer a better performance compared to other small caps. That is why if you see the CSI 300, it's a performance better than CSI 500, because that is a small and medium cap. So those shareholders, I don't know what they can do at the bottom. Obviously, they will do something, as probably they more get involved in the company's operations, and provide certain support from the government perspective for those companies, because they are shareholders. They understand their situation, understand their difficulties. Probably
Right.
They can do something to relieve it.
Yeah, and those companies are going to be the ones that benefit from any stimulus. They're going to be the first
exactly.
ones that, it's a very top down. So policy changes that come into place, if any bank is going to have an advantage, it's going to be those large state-run banks. If any, all of these companies that are large and state-owned, they're going to be the ones to benefit first. So if we're looking for signs of bottoming, your point about CSI 300 versus CSI 500, that's a crucial point. When you have outperformance in the mega caps versus the mid caps, that's indicating a potential sign of bottoming.
That's true. Yeah.
So if we're looking for the end of that bad news, and I think the bad news about COVID is, I don't know if it's baked in. It's hard to discount that, because we still don't know the duration of these shutdowns. But we do have a number of people that are very comfortable saying, we see that these shutdowns are going to continue, and we're going to do our calculations about how that's going to manifest itself through our stock prices.
The bad news is really big. Could be like the interesting social emotion indicators, like the Baidu. They even created some index to track that. What's the hot topic? What people talk about. From the experience in China, it's really like as long as in the bear market, all the news is bad news. Even some good news, they interpret into the bad news.
Yeah.
And also the bad news is accompanied with market movement. other big market movement, always is some bad news or some, at least you need
That's
some
the fear and
excuse.
greed. That's
Yeah,
the fear and greed, right?
that's exactly. And on the uptrend is on the opposite way. Everything looks good.
Everything's great. Yeah,
Yeah,
everything's great.
exactly.
Well, we're going to leave it there this week. The market hopefully is showing signs of bottom, but we need to maintain our defensive positions. These large caps seem to be the place to allocate if you have to allocate at this time, and holding on to those until we see better indications and those quote unquote green shoots. With that, we'll leave it for show F3. Thanks for tuning in.
Thank you.